Mid-2020 correctly advised our viewers to start buying stocks amid the pandemic sell-off. He's Steve Auth of Federated Hermes. You buying today?
We're not buying today, Liz. We're waiting for, we put some money in last 2 weeks ago at that first big drop towards 5,000. We've thought we would retest. Usually you would, and that seems to be the case here. We have 5 milestones we're looking for to settle this market down. And as we start clicking away at those, which we think we will, we'll probably be buyers, add another leg in.
Okay, what's the milestone for the S&P? Because we're at 51.15 right now.
Right, so we think we ought to get somewhere around 5,000, maybe 49.50, something like that over the next week or so. It wouldn't be surprising to us.
And then you would go in. But you did buy 2 weeks ago.
Absolutely.
That first big sell-off.
We're telling our investors to be at moderate overweight equities, not at max. And we want to have enough price upside to take care of all the risks that we've got on the downside here. So we're sitting there and we're looking to add. We're recommending a combination of defense and offense, sort of a barbelled approach. So we have a big allocation to dividend-producing stocks with big diversified businesses, less impacted by the tariffs, and then financials. Some of these tech stocks are getting crushed. We think are the way you play offense here. Yeah. Some of these, like Google's down 35% or something.
So your defensive plays, Southern Company, ExxonMobil, Amgen, these are dividend payers, you say, and just broad-based companies that really tend to do well, at least under the, not even the best of circumstances, but under worse circumstances.
Yeah, I mean, their underlying businesses are pretty stable, Liz. They're not the fastest growers in the world, but they're also not going to be that affected in this. We think we're in a soft patch here for sure, going into the back half of the year.
Well, Southern Company's cheaper today by about 2.25%. I think they all are down at the moment. Your offensive names, where you would jump in, these are sort of the riskier ones. Amazon. Now, Amazon has a lot of exposure to China.
It does, and the stock's down big time, more than offset that. And we would think,
it's down about 23%.
Yeah, and Amazon is going to find its way to how to manage its way through this business, through this environment. They're not, they're not sitting still waiting for things to happen. So they'll find their way through this.
And they've got AWS, which is it may as well be a Fortune 500.